All right. What's going on, everybody? Got a little intro music going here for a few seconds. All right, we'll start waiting for some people to get into the room here. We're going to have a great day today, guys. We are going to have a great day today. I had a great meeting yesterday. With some. It was actually a group meeting with some programmers about automating our system here, automating our TrendCloud system, and very, very interesting stuff. There's so much you can do now. With software. Also today at 1:00. Come back today at 1:00. We'll be interviewing Brandon Wendell, who is a CMT. And we're going to be talking about what he learned going through the classes. And it's going to be pretty good. So he's going to be my very first podcast interview. So I'm very excited about that. All right, so we're getting a lot of mixed signals today, unfortunately, and that's what we look for, right? We don't want to just jump into every single trade that we're making some sort of positive ID on something, right? We have to go beyond making an observation. And we really need to start putting together a trade plan, which we have and that we use. But the trade plan goes way beyond any type of observation, right? Your trade plan goes way beyond any type of observation. Frank Savino in the house. Good morning, Frank. So that's what we're going to do today. We're going to go over that, and we'll talk to Brandon at 1:00. That's going to be awesome, and we'll see what he has to say. We'll see what Brandon has to say about automating a system, and let's see if he's ever done this before, or if he has any experience, with using an automated system. But I think it's going to be very beneficial. It'll be a great conversation. Right off the bat here, I wanted to show you guys something. Check out the Australian dollar. Look at this. Look at how we were in this consolidation here. Let me turn this off so you can get a good look. Look how we were in this consolidation here. For what was that, since January 19th all the way to today. We just broke out of this consolidation today. It's a pretty clear picture, so it's the longer you get these consolidations like this, right? The longer you get this, the stronger the breakout ends up being. That's just how it is. And we got that today. So that's that's like a few days of sideways movement, and now we broke out to the downside. We broke through here, new structure low. So now what we can do is go over to our lower time frame and confirm the trend, which is down, right? Trend is down. Candles are red. TrendCloud is red. We're below that negative 100 on the CCI. Great. Now let's go over to our lowest time frame. And on the 15-minute chart here, you can see we're extended, right? So where we broke out we've gone extended. We're hitting that sixth wave now, and the candles are ice blue. So what does that mean? It means we want to break above this 50 simple here. So we're going to start pulling back. We can start looking for, for levels of resistance. And it's probably going to come back here and use the breakout area as resistance. So we can start looking to take the trade actually when this pulls back up into here. And, we've got this drop base drop right here. We've got that. And we've got this, right? Got that little area. And we've got the top of this. I don't know if it will pull back that far. I don't know if it will pull back that far, right? But this is very doable. That is very doable. And on the 4-hour chart, it's actually all this, isn't it? Drop, base, drop. What does that look like? Yeah, this whole thing is the 4-hour. Let's clear it up. That is the 4-hour drop, base, drop there. Get rid of these lines. There we go. I know, Krishnan, I know if you're listening, this is your specialty here, the Australian dollar. And there you go. That's pretty exciting. That's pretty exciting to watch. So on this pullback here, we should be able to get into this. I would say right in there. And look where we are. So TrendCloud on the 1-hour chart is actually inside of that 4-hour supply zone. That's just more evidence piled on top of each other, right? We like to stack that evidence. Oh, we've got 4-hour supply zone. Great. Oh, look at that. We have the 1-hour trend cloud inside of the 4-hour supply zone. Great. Whoa. Okay. ADR levels. We've already hit. Look at that. Okay. So, yeah. We've hit those ADR levels, haven't we? And we went to that second ADR level today, and now we're moving back, right? So this is probably going to be very slow today. It's going to be making the move slowly back up here with a lot of downward force, right? So that's just going to inch its way back to the top here. But as far as going short today, we definitely don't want to short it anywhere near any of these ADR levels now, do we? But isn't that interesting how that has already happened, okay, on the Australian dollar? So a lot of information, great information. If we didn't have that, we would be saying, like, oh, well, should we still continue to go short here? So look at how we had on the 15-minute chart, we hit 2 ADR levels and then started to become overextended. That's a great amount of information. That is a great amount of information there. Okay. Let's take a look. What's on our scanner here? We've got the Dow, we've got natural gas, and we have copper. So let's go over, let's go over to copper first, because that has opened already and we've got the opening range. Okay. So here we've got the 4-hour demand zone, and we're very close to an ADR level in that 4-hour demand zone. Okay. We are in an uptrend on the 4-hour charts. We have a bunch of mixed signals here, right? So the idea is, now take a look at this. Here's where your mind, this is where your strategy mind, your whatever you want to call it, your strategy, your inside of your mind, what your brain is telling you. If we're in an uptrend on the 4-hour chart, right? Clearly, we're in an uptrend on the 4-hour chart. And we know that price likes to move like this: impulse up, correction into the trend cloud, impulse up, correction into the trend cloud. What is the next move here on that 4-hour chart, right? Impulse up, right? Because we're still early in this trend. That is the move here. That is the move here. But what does the 1-hour chart show? The 1-hour chart is saying impulse down, correction into the trend cloud. So what's the next move of the 1-hour chart according to this? Look at that rejection candle. It's this, isn't it? So which one do you follow? Do you follow the high time frame, or do you follow the low time frame? You'll never know. You'll never know. And if you don't know and it's not the same, well, then you have to leave it alone. That's what I want you guys to start thinking. That's how I want you guys to start thinking, because that is going to filter out your trades for you. You will filter out the best trades by doing that. If you can't determine, and you can't, right? Okay, we're in an uptrend and this thing, it pulled into the trend cloud, so we're about to make another move up. But wait, the middle time frame is saying the exact opposite. We've pulled down back into trend cloud. This should be impulsing back to the downside. We're right in that level. In fact, look what it hit. It hit this right here. So which one do you follow? Then you can start saying, okay, well, momentum's to the downside. High time frame momentum is to the downside as well. And we're also cycling down, right? So there's still a possibility that this goes a little bit further down, and maybe it wants to hit this ADR level and then reverse, right? Because that would just be right about here, right? That would be right here. Here. Okay. High time frame, that's where that ADR level is. Maybe it wants to pull down to there, right? So, when you've got mixed signals like that, you just simply have to, you've got to walk away from it. How do you see this? Like, what is this all about? What are you gonna do in this situation? So that's what's going on with copper right now. And there was some news that came out, and you could never know what the news is going to do. Hey, Gary, what's going on, buddy? Good to see you. So so how about we switch over to, let's see. All right, let's go over to crude oil. Or are there any other metals? Oh, there's platinum. Let's look at platinum. Wow, platinum is super extended here. Let's get rid of all of this. Again, we're in an uptrend on platinum on that high time frame. Okay, no problem. But we're breaking below the trend cloud here. This is a really deep pullback. Cycling down, momentum is down, breaking below the 50. Okay, so we're still in an uptrend, but we've broken below a lot of resistance levels, right? These major levels of resistance broke below, or I'm sorry, support. Major levels of support we've broken below. with a lot of momentum to the downside. High time frame. Look at that. We have just hit that ADR on that middle time frame as well. A lot of momentum to the downside. Everything is showing down, but we have kind of run our course, haven't we? My goodness, what a day. What an incredible day today. I mean, this is just unbelievable. Look at how we're hitting that ADR level and the 15-minute trend is extended. That's two pieces of information saying, hey, I know we have all this downward movement, but I've run as far as I am going to run. I'm not sure if I have anything left in the gas tank. That's what price is showing us right now. So it'd be very interesting to see a move today out of the opening range here on platinum to actually break back up to here and then start to continue the move up. Okay, but we just we'd be guessing if that's what we did. Whenever you feel like you're guessing at everything that you do, it's because you don't have an objective trade plan in place. So if you feel like, I don't know, I'm kind of maybe that's it, maybe that'll work. If you feel like you're guessing, your trade plan is not objective enough. You've got to write that out. Take those observations, write it out in an if-then statement, and then apply it to the chart. Otherwise, you're guessing. One of the most common like complaints that I hear is, man, every trade I take, I feel like I'm guessing at it. It's because that trade plan isn't quite objective enough. It's okay to not know what's going to happen. It's okay to not know what's going to happen. That is a healthy level of uncertainty. It's okay to have a healthy level of uncertainty. Like, I'm going to follow this very objective trade plan. I don't know if it's going to work, but at least I know in the long run it works. And that's why, that's how you make money, right? So what else do we have here? Silver. Let's go over to silver. Same thing. Look at that. We have all of the metals have already hit that ADR level. And look at the reaction. I mean, look at the reaction we're getting off of that. And again, even silver, 15-minute chart, extended, hit that ADR level. Wow, look at the bounce out of the opening range. Look at the bounce out of the opening range on silver. You'll never know. You'll never know what this, but do you see all the downward momentum here? Cycling down, trend is down, everything is down. We're just starting to get a momentum shift to the upside on that high time frame. We're just starting. Hey, good morning, Kazi. Good to see you. So yeah. So it's an observation, right? And we don't want to make the mistake of saying, oh wow, look at this. Look at how we hit that ADR level on this extended trend and it just rocketed up. That's just an observation. You've got to take that observation and apply it to the trade plan. Don't just trade off of previous observations, right? Don't just trade off of previous observations. Yeah, that's right. Yeah, Kazi. Yeah. That's what we're seeing. That's what we're seeing, right? That's what we're seeing. I'm glad you guys are seeing that as well. A lot of mixed signals. But let's just keep looking. Let's keep looking. That was silver. Let's go down to corn. Okay, pseudo, right? What kind of trend is this? What kind of trend is that? overall down, right? I mean, you can draw a nice trend line on that. You can draw a nice trend line on that, right? Here. See that? Broke through, pulled back, and we're sort of now here and here, right? Well, actually, not real. I wouldn't draw it like that. I actually wouldn't draw it like that. I would draw it like this. Right? Here's your impulse down, pulls back, breaks through structure right here. So that's a point. Pulls back, breaks through structure. So that's your second point. So I would draw this trend line like this. Okay. You can get as fancy as you want with it, or as, you know, that's exactly how I would draw this trend line. Does everybody know why I call this a dynamic trend line? Does everybody know why I chose these 2 points? Okay, right here. Whoops. That is a point of connection for the trend line. That is a point of connection for the trend line. Okay. And this is why. Let me show you. We're going to use this as a connecting point for the trend line because it broke through structure. Okay. It broke through structure. So that is a connection point. Went down, pulls back. We can only say this is a point of connection when it breaks through this right here. And actually, I mean, look at that. It kind of just, it like just broke through. It doesn't have to close below. It just has to break below. But that's how you choose the points. Okay. So for the sake of argument, let's just say it's here, right? Broke through structure, so you can connect that point. This right here, we don't really know about yet, right? If this breaks through here, then we can say that is a connection point as well. In which case, you would be doing this. I only like to connect 2 points. I only like to connect 2 points because if you don't, you get this chart filled with lines, right? You ever see that? You ever see people draw trend lines like this? You know, they go like this, you know, and then they say, and then they do like this, and then, you know, they keep drawing these lines, you know, they'll leave it on there, you know, they'll be like, oh, okay, well here, you know, and they do like that. Right. It doesn't, it's stupid. It's stupid. Don't do that. So look for the connecting points, right? Look for those connecting points. Broke through here. Good. That's a connection point right there. That's a connection point. That's a connection point because it broke through here, right? This is a connection point because it broke through right here. So you can say this, right? That's how we do it. That's the best way. And then when you get to here, break, we have a trend line break, okay? And it ended up going down and just, see that? It just squeaked by. It just broke through there. It just broke through there. So now that's your new connection point there. From there and there. Only 2 points. Otherwise, the angle of this thing gets all cattywampus. What's that, bro? Out of the Bob Dunn OTA school, I would add you need 3 touches. Yeah. So some people do 3 touches. Yeah. But to draw it more dynamically, you know, to draw it more dynamic, like why Why 3? Why not 4? You know, it's like if you want to use it with the most up-to-date information, this is just how I was thinking of it. I remember that. Yeah, 3. I remember. Who else was there? Was another guy, Gary. There was another guy that I used to really like. He used to write a lot of articles for OTA. God, I can't remember his name. Break of structure part. Yeah, it's very useful. It's very useful. But yeah, I always heard the 3, you know, make sure you have 3. It's just for like Dan Sugar, maybe that's him. Yeah. But for me, it was like, well, why are we using this trend line thing anyway? Right? We're using it because we want to use it for support and resistance levels. So why not have the latest information, right? And so all you need is 2. All you need is 2, right? You need 1 here, break of structure. Good. That's a point right here. Good. Break of structure. That's a point, right? Now we broke through the trend line, but look what it did. It came down and just broke through here. So we have to take that into consideration. So now we're using these 2 points. It's just a way to work your way down. It's a way to work your way down. Did trend line breaks? Oh, he did. He did trend line breaks. Yeah. Yep. Classical charting, right? Yeah, it's just classical charting. So I call that like a dynamic trend line. But do you see, Gary, how is this point right here? Okay, so we've got 3, right? We've got 3 points here. But what 2 points are more valid? This one and this one, right? Because they broke structure down here. This broke structure here. This broke structure here. What did this thing do? It didn't do anything. It didn't do anything for us. This could very well, you know, this could very well do something like this. You know, now what do? You got to wait. You got to wait for that structure. That you got to wait for that structural break. That just logically that just made sense. But anyway, corn downtrend. TrendCloud. Extended trend, pulled back, recalculated, broke through structure. There's your swing high and swing low right there. And we're sort of in between now. We're in between these 2 levels. So, you know, this is pretty TrendCloud's pretty sensitive. Like it's telling us we've got this downward trend, but now that 50 simple is green. It hasn't really committed. It hasn't really committed to continuing the downtrend, has it? So it's just a little piece of information that you might want to take into consideration. We've got the uptrend on the 1-hour chart, right? We've got this pseudo trend here on the 4-hour. We've got this upward trend on the 1-hour, but momentum is down. Momentum is down on both time frames. So it's fighting for that downward move, right? It's fighting for that downward move. Maybe if we get the crossover here, right, we might start getting some lower time frame signals to the downside, in which case our target is right here. So if we start getting some downward signals and a crossover, we can take that trade from here to here. And we even have a level right here as well. Previous day's low is right there too. So all of that comes into play. Mixed signals everywhere. Wheat, is wheat on here? Yeah, wheat is on here as well. Let's see. Pseudo downtrend, right? TrendCloud is red, candles are red, but oh wait, 50 simple has not committed. That 50 simple has not committed to the downtrend. So full commitment on the middle chart, right? Full commitment on the middle chart. Cycling down, momentum is down. Okay, so we only have one piece of the puzzle missing. We are very close to the curve, right? Market edge. We got that curve zone right here. So we're low on the curve. 15-minute chart. 15-minute chart's extended. We're in. We hit that curve on the 9th wave on the 15-minute chart. Probably going to get a bounce, right? Does it continue the downtrend? Right? We have to wait for this to recalculate. Can't really take a chance on that, right? ADR is real low. Average, it could still hit the average daily range. And we have momentum on our side, but we definitely have to wait for this to recalculate. So why don't we set an alert? Let's set a downward alert on wheat. Whoops, I meant to do that. Okay. TrendCloud, down arrow. Let's say on bar close. We'll wait for that bar to close, and we'll say wheat. There you go. I realized if you, hey, good morning, Mariana. Good to see you. All right. If you label or name the alerts, it shows up right here. So it's nice and clear. There's our wheat alert, the S&P alert, and the crude oil alert right there. All right. So we'll set an alert. It'll let us know that we're hitting those 15-minute. We got a 15-minute alert set there. Let's see. British pound. Wacky, right? Holy moly, that is just looking real. Look at that mess. Look at that mess. Holy moly. Do we really want to trade that? I don't know. So, what this is sideways, right? This is all sideways movement. This stuff really throws a monkey wrench into our analysis, doesn't it? And draw it like that. That kind of messed us up. And how about like that? Definitely makes sense down here, right? Are we going to get that bounce out of there? Oh, wow. We just hit that ADR level. So there's a good chance that the British pound wants to make its way back up to here. There's a real good chance. But we would only be going on the extreme levels, right? We would have no other aspect to this trade. It would just be that one observation. We don't have a preponderance of evidence, do we? We just have one observation that's been relatively consistent. It comes up here, it goes all the way back down to here. Comes down here, right? Boom, boom, boom. Goes all the way back up to here. That's the only thing we're going on. That's the riskiness of taking trades in a sideways in a sideways movement. I don't know. I kind of like having a trade plan that has a bunch of checkpoints, So we've already traveled. Look how far we've traveled. Came down, hit that ADR level. And now we're just starting on the 15-minute chart. We're just starting to switch to the upside, right? But momentum is completely, momentum is just starting to come up, starting to hook up. It's still below negative 100 here. And so in this type of a thing, right, the reason why this is so difficult to trade is because by the time our CCI indicator breaks above positive 100, this thing is already here. and it does this. Right? That's the monkey wrench that gets thrown into this thing. So, you know, I am excited about the Australian dollar, though. I don't know if Krishnan is in here. Where is it? Australian dollar. The Australian dollar definitely consolidated. See that? We were waiting for this thing, right? I mean, this was it for days. Consolidating. It did it up here as well, right? Consolidated, breakdown, pulls back, consolidation, breakdown. It just likes to do that. The Australian dollar moves pretty nicely. It's pretty clean. Australian dollar has some pretty clean movement to it. Okay, and same thing. 1 hour chart, we've already hit that 125% of its daily ATR there. Now what? Broke out to the downside, great. We may have a nice setup to the downside tomorrow, right? Tomorrow and tonight, we really want to pay attention to this Australian dollar tonight. It might pull back all the way to here because that's what that 15-minute chart is telling us, right? 15-minute chart is clearly showing, hey, we are extended and we want to recalculate. How far up this thing is going to go, I don't know, but we definitely know we've got a lot of resistance up here. Previous day's low, previous week's low, right here, right at that consolidation level where it broke out from. That's great information. That's great information. You can set an alert. I wonder if we can set. I wonder if we can set an alert. Is it on here? Yeah, it is actually. Opening range, does it give us? Oh, it's not really set up for it. Okay. We can just set an alert. If it gets up to here, alert. I'm going to put every time. Crossing up. This is Aussie dollar. There we go. Interesting. We'll see what happens. But there might be a real nice move to the downside on that Aussie dollar. Okay, 9 minutes. Let's see here. Oh, we don't really have anything on our scanner. Oh, there we go. Okay. S&P just jumped onto the scanner. $15-minute chart is up. 1 hour chart is down. Momentum is down. 4 hour chart. transitioning to the downside. Okay, so lower time frames, trend and momentum fighting for that upward position, high time frame fighting for that lower position. What, you know, very clear to say, I have no idea. There's too many mixed signals, right? So now you sit on your hands. That's what your trade plan really needs to do, is filter this stuff out. Bitcoin, I added Bitcoin to my scanner, BTCG, Bitcoin futures. Let's jump over to Bitcoin futures. Let's see. Not a lot of volume, is there? On the major cryptocurrency futures, not a lot of volume. You got more volume on the micro Bitcoin. Let's go to that. Let's go to the micro Bitcoin and take a look at this. Upward trend, cycling up, momentum is up. Downward trend, downward momentum. And that 15-minute chart has just broken to the upside. Okay. Okay. So how far up, the question is, how far up is this going to go? What we need to see, right, in order for everything to line up the way we want it, we need to see a break above structure, break above 100, and then on the lower time frames, right? On the lower time frames, right, we start to see something like this. Pull back. Maybe it pulls back into some kind of demand zone, and then that break of structure there, right? That's what we're looking for on that lower time frame. That pattern on the lowest time frame. 5 minute. Wow, 5 minute. Very weird. Not a lot of volume. That's what happens when you don't have a lot of volume. You get these little mouse tracks. It's probably looking worse on Ethereum. Ethereum futures. Yeah, same thing. They pretty much move the same way. But you can see consolidation, breakout. We just broke out of a lot of consolidation here. 15-minute chart just looks like a smaller version of it. Breakout, broke through structure here. Trend reversal. All right, heading for that daily ADR. So mixed signals all around. Man, unbelievable. Let's just look at the micro, or let's look at the micro S&P. Same thing. Got this pseudo, I don't even know what to call this, right? This is a really deep pullback. We got the crossover, but we're not fully committed yet to that downward trend. Okay, fine. We'll just wait. We'll wait until you're fully committed. Cycling up, momentum is up. But what kind of trend is that? You know, we're not fully committed to the trend. And when you're not fully committed to any type of direction, what usually happens? Whipsaw, sideways movement, right? You know, you get all sorts of weird stuff happening. We'll see what Brandon has to say about that. We'll pick Brandon's brain today at 1 o'clock, and we'll see what Brandon says. We'll see what they teach in that CMT course about looking for mixed signals, So that'll be a great conversation for today. Micro Dow, upward trend. See, this is a fully committed upward trend here, right? Candles are green. TrendCloud is green. 50 simple is green. That's a full commitment right there. Cycling up, momentum is up. All right. What is the expected movement of this picture right here? It's this, isn't it? All right. So what scenario are we looking for in our trade plan, right? Okay, we got to wait for that. And we got to wait for that. We need a crossover, right? We need that little plus sign again. Crossover. Then we start looking for the trades. We don't have it yet. We don't have it yet. Crazy. It's not giving us anything. Not giving us anything. Full commitment to the downtrend on the 4-hour chart here. Red, red, red. Okay, we are cycling up. Where are we cycling up to? Well, we have to assume we're cycling up somewhere into the trend cloud to make the move down. And if we do that, kind of makes sense, right? Extended trend on the 1-hour chart, which means we need to have some kind of pullback, and look what we've got here. Maybe it wants to pull back to that ADR level. That would be right at the 50 simple on the high time frame. See how all of that lines up? The pullback on the 1-hour chart might pull back to the 50 simple on the 4-hour chart. Well, why would it do that, Chris? Well, we've got the average daily range right there, right at that same area, kind of stacked on top of each other. And it's extended. We have an extended trend. And what does price want to do on an extended trend? It wants to pull back above the 50 to recalculate. So we could be, we're in between this recalculation mode. So we don't even get to the lowest time frame because our rules haven't been met on the high time frame and middle time frame. So there is no even discussion of the lowest time frame, right? Systematic, objective, and systematic. That's your mantra when you're building out that trade plan. If you get yourself, see, we've got a really objective and systematic trade plan for TrendCloud. It makes all the sense in the world to automate this system because we have that in place. Okay. So the conversation that I had yesterday with these programmers was, hey, this is the system. We need to automate it so that it runs for us 24/7 and does all of this for us. And that's what we're working on, guys. So we're working on automating all of this for us. What else we got here? Well, we're jumping off. Everything's jumping off of the demand zone side and moving towards that supply zone. Yeah, market sentiment is shifting to the downside here, isn't it? Market sentiment is shifting to the downside. Shorter and shorter. It's getting, this list is getting shorter. This list is getting longer, right? That should tell you something as well. See, we've got everything on our chart working for us. We've got everything on the chart working for us with this TrendCloud system. A scanner telling us where market sentiment is. We've got momentum filters. We know whether or not we're in an impulse or a corrective phase. We've got trend direction. We've color coded everything, right? We even know if the trend has become extended, turns the candles ice blue. All of this information, once you understand how price reacts to that piece of information, you can really put this together and come up with a very systematic and objective way of looking at your trades and looking at the market. And then you start automating it. Well, not a lot going on here. But there is a lot going on, right? We've got a lot of mixed signals. There's a lot of mixed signals going on. Let's go back to the Aussie. What's going on, Aussie dollar? Yeah, it's making its way back, right? Aussie dollar hit that second ADR level. It's doing exactly what we said it was going to do, right? How is it that we are more accurate than the news before the news even comes out? Like, how is that possible? It's because we know how to read charts. We know how to read charts. Well, how did you know price was going to break back above the 50 simple today? Oh, well, because it's extended. Well, what do you mean? Well, there's 5 waves in an average trend, and we're at the 6th wave. So we like to turn our candles ice blue when that happens to give us a visual representation of what an extended trend looks like. 1 p.m., Gary. It'll be back on this channel. You'll get an alert. If you're subscribed to the YouTube channel, you'll get an alert. And it'll be 1 p.m. Brandon and I will get together. I don't know how long we're going to talk for. We'll talk for as long as it's interesting. And then I think what we'll do is I'll edit it, and put it out there. But it will be live, so you can jump in there. It'll be just like this. You can ask questions and stuff. We'll ask him why he always wears a bow tie, what that's all about. We'll ask him if it spins, he's pretty funny. He's a good sport. Yeah. So, I mean, like, how did we know this was going to happen today? We had a whole bunch of information. Where's our ADR checkpoints? Right there. Look at that. Came down. ADR checkpoint hit. Candles became extended. Oh, yeah, definitely. Definitely some kind of pullback is going to take place in this area. And it's definitely going to go above here because that's what price does. And we know that. So that's how we can predict these things. But you didn't do that with any news. I don't understand. How did you do that without looking at the news? We know how to read charts. Well, what else is the Swiss? The Swiss jumped on there. What is the Swiss? The Swiss franc. What is the Swiss franc doing? Okay. Uptrend on the 4-hour. Cycling up. Momentum is up. Starting to break above the 50 on the 1-hour. Getting real close to breaking through here on our CCI. We're getting close on the Swiss. 15-minute is already in a full uptrend. Okay. 15-minute is already in a full uptrend here. And this is what it's looking like. All right. We need to break through here, don't we? How about if we wait? Let's break some structure there. Right? Let's break some structure. And then let's start looking for some TrendCloud signals. What about the 5-minute? Yeah, the 5-minute chart, second wave. So this is going to come up here, hit this, break through, and we'll be in that fifth wave. These 5-minute trend cloud signals have worked all the way up here. Let's examine that. Let's grab that vertical axis. 7:55 in the morning. Uptrend, cycling up, momentum is up, but we don't have it yet on the middle chart. So you see how we would be forced to not take that. We would be forced to not take that trend cloud signal because we don't have it here. And the trend isn't up, right? And, you know, we've got this, look at this crummy sideways movement here, right? You just can't take that risk. It ended up working. And that's where we all trick ourselves, right? That's where we all trick ourselves. That's where we say, oh, well, it worked. So let's just forget about the middle chart. I mean, we don't need the middle chart. We don't need the middle time frame trend. We don't need CCI. We don't need it. We just need the 5-minute and the 4-hour chart. And then you redesign the whole trade plan because this one trade, this trade worked under those conditions. And so you automatically think that that's what you're supposed to do from now on. Right? It's the common mistake. It's a common mistake that you got to be careful of, right? We use 3 time frames all the time. All 3 time frames, right? High time frame, trend and momentum have to be going up. Middle time frame, trend and momentum have to be going up. Very specifically, CCI has got to be above positive 100 in order to take any trade. Then we go down to that lower time frame. Start looking for those trend cloud signals. Start looking for the retest of the opening range. Start looking for bear traps, demand zones. That's when you can apply everything that you learned about supply and demand, about opening range, about trend cloud signals. You have the okay to take any of those strategies as long as these 2 conditions are met. How great is that? You'll never be confused again. You will not guess anymore. You won't guess. We're not guessing. We know. High time frame, upward trend, cycling up, momentum is up, great. Checks all the boxes. Middle time frame. Well, we don't have the trend. And we don't have CCI. Well, there's no going to the 3rd time frame then, right? We don't even get to this point. We don't even get to choose what the best strategy looks like. We don't even get to choose because these conditions aren't met. You gotta work it that way. You've got to work it that way. Let's look at the euro. Okay. All right. Yikes. No wonder the euro isn't on any of our radar screens, right? Downward trend, cycling up, which means we're correcting. We're in a corrective move with momentum. Okay. So we've got this. We've got this correction coming back up into the trend cloud, and we're expecting this, right? Whoops. We're expecting that to happen. Okay. What's it look like? Middle time frame, pulling back, hitting that 50 simple. Okay, that's working. That's kind of working out, right? We could start turning around from there. That looks good. That looks good. And we're extended, right? We're extended on this move. Whoa, look at that. Are you seeing this, guys? Are you seeing this drop? Talk about perfect timing of an example here. Starting to do something a little wonky, huh? Look at the drop. It just hit that level and dropped out of the sky. We've got 4 minutes left for this to close below the 50 here on the 5 minute. Go out to the 15. Is the 15 minute extended as well? No, it's not. Okay. So the 15 minute just came back and hit that 50 simple and bounced right off of it. It's probably reacting off of this momentum, right? We can kind of put the pieces together as to what matches, right? Why is the 15-minute bouncing off to the upside on this TrendCloud? Well, probably because of this. So we're still in this corrective move into the TrendCloud. Maybe it wants to go a little higher, right? We don't know. We don't know. We can only put together our strategy and follow it systematically and objectively. That's all we can do. So you can see how it could get confusing. Like, oh wait, but it's doing this, but then again, this chart is saying down, but the 15-minute is saying up, and the high time frame momentum is up. This is a whole bunch of mixed signals. I don't know what's going on. You do know what's going on. You do know what's going on. It's showing you a whole bunch of different pieces of information. And people get overwhelmed when they should be saying, oh, well, this is just a whole bunch of information that is not in alignment. And that's your answer. That's your answer to walk away. That's your answer to walk away. So I think that's a good lesson today in not getting confused. Okay, you're not confused. You're looking at mixed signals. But if you don't know how to verbalize that to yourself, then you'll convince yourself that you're stupid. You don't know what you're doing. Oh, I don't know. No, you're looking at mixed signals. So you do know what you're doing. You just need an objective trade plan that you can approach systematically. High time frame trend and momentum must be in the same direction. Okay, good. Middle time frame trend and direction must be in the same direction. Are they both equal? Yes. Okay, great. Go to the lower time frame. That's it. That's it. All right. So, all right. 10 o'clock, guys. I am going to clean up a bit here, get ready for the big interview with Brandon Wendell, the first interview on the podcast. And that'll be a lot of fun. We'll ask a lot of great questions, and we'll talk about what happened today and how he approaches the market in those situations as well. So it'll be great. All right, guys. Well, I will see some of you at 1 o'clock. Drop by if you can. Otherwise, it will be recorded and it will be on the YouTube channel. Okay, everybody. Have a good one. I will talk to you later.